Some days are just better for trading than others. If you've been trading for a while, you probably know this for yourself, but maybe you don't know why. Now, today, I saw a pattern emerge, and I've spoken about this pattern in my previous videos. And that pattern, you can see it on my chart, right? Or maybe you can't. But on this particular day, I saw a pattern that was unmistakably a winning trade setup. If you're a beginner or you're just an intermediate trader and you're not quite sure on how to set your chart up, maybe you start out with a blank chart. And this is how the day begins. And I have prices set up just about a half an hour prior to the market open. So as I said, I saw a terrific pattern emerging even before the market opened. And for those traders who've seen my previous videos, who've seen this trade setup, who have heard me speak about it, they took advantage of it, and it was an easy 30, 35 point trade, even more. And so as the day progressed, and I'm going to start the action, and here we go. As the day progressed, right there, we were at about 9:30, and prices immediately dove down and basically stabilized at a certain point, then came back up. And so the trade was right at the beginning. This was where the market opened, right over here. This is the 9:30 candle. This is where the market opened. And this is where I saw this trade pattern set up, and especially within the first 3-minute candle. Do you know what that pattern is? Well, let me give you a clue. One of the things that I put on my chart every day, and you should as well, is the previous day's close, okay? And that is right over here. So just prior to the market open, we could have our chart set up with only the previous day's close and have that as a clue to tell us which way the market is likely to go on this particular day. But of course, prices don't always close the gap. This was a classic gap trade, a terrific gap trade, and there are 5 points between each horizontal line on this chart. And so let's plot it. 5, 10, 15, 20, 25, 30, 35, almost 40 points. If you got in just after the 3-minute candle, 35 points, terrific. And that's just down to the previous day's close, the gap trade. But is there another clue? Well, if you have nothing but the previous day's close, you still have a pretty good clue. Clue number 2, this was a Monday. Mondays tend to be very good days for trading because many times Mondays have less volatility at the open. And as you can see, there was virtually no volatility at the open. And the third clue that I have on this chart, and it's not the stochastics that I have down here, because stochastics is a confirmation of price action, but it wasn't the stochastics. It was the Taylor trading zone. And the Taylor trading zone, let me put it on my chart for you. Okay, right over here is the Taylor trading zone for this particular Monday. And so the trade setup was right over here at the open when prices immediately, for whatever reason, immediately faded the trading zone. In other words, traded away from the trading zone. Trading zone was down here. And so immediately prices set up to close the gap, but also to trade within the trading zone. Now, what is the trading zone? The trading zone that I use is the Taylor trading zone, the numbers that George Taylor developed over 80 years ago. If you've seen my previous videos, you know I speak about this all the time. Shouldn't be a mystery. If you haven't, thanks for watching. I hope you subscribe. Now, as I said, today was a terrific day to trade. It was a Monday. Prices faded the trading zone and immediately dove down into it. Now, when prices do this, when prices fade the trading zone either to the upside or the downside, they are generally going to trade throughout the trading zone, either from up to down or down to up. Where the market opens, day of the week, where's the previous day's close. So where does this trading zone come from? I get it from the Taylor Trading Calculator, and I'm going to show it to you. It's right over here. Here's the Taylor Trading Calculator. Doesn't look like anything, right? There are only 5 columns on this chart. Actually 6 with the Z indicating it's the December contract. And so the 5 columns are, in the first column is the date. These are consecutive dates, day of the week. And in the next 4 columns, I just plot the open, high, low, close. And for the day that I plot the numbers, that is the trading zone for the following day. So by the end of the trading day, I can plot my trading zone on the chart for the following trading day. And so where is the trading zone numbers? Well, when I enter the 4 numbers, the open, high, low, and closing prices, and let me bring you over to the big picture. Here is the Taylor calculator. All these numbers, and I know they look like a lot to take in, but keep in mind is that all these numbers are calculated automatically. And basically the only 3 columns that are important here are the 2 columns in yellow and this column in gray. Mostly the 2 columns in yellow, because those columns indicate the limits of the trading zone, the daily resistance and support. And so the resistance and support are in the yellow columns, and the range, simply the difference between the 2 of them, is in the gray column. So there was a 60-point range on the particular day that I showed you previously. And so although all these numbers are supposedly meaningless, they are the construction numbers that go into Taylor's calculations. There are a dozen calculations, and the final 2 numbers, the support and resistance that you see in the yellow columns, are an average of averages, all right? If you want to know more about how George Taylor developed the numbers and how they're calculated, I have an example in a video on my site at timelessdollar.com where you can get your own copy of the Taylor Trading Calculator, all right? Very few people know about Taylor's trading calculations, because why? He wrote a book, so why should it be so mysterious that none of the other trading schools talk about it very much? Because the numbers are very difficult to determine. The calculations are very difficult to determine. And Taylor, in his own book, didn't give the formulas. And so it took me a long time to ferret them out. Here they are for you on my site at timelessdollar.com. They're invaluable. Let me prove it to you. All right, let's go back to the chart. Here's the Taylor trading zone. And when prices fade the trading zone just prior to the market open, either to the upside or the downside, they're virtually certainly going to go down into the trading zone. And the trading zone is particularly accurate. And as I said, on this particular day, the trading zone was 61 points. Now, the absolute support and resistance of the trading zone is less important for the actual support and resistance numbers than it is the range. And so what I do, I take my trading zone and I transpose it. I make a clone of it and I transpose it to the intraday high or low in the first half hour to hour of the day. And so here is my transposed trading zone. And as you can see, the price is traded virtually identically to this 61-point calculated trading range. Now, on this particular day, if you use the trading zone, it gave you a good indication of where prices are likely to go. And of course, they closed the gap. It was a Monday, terrific day to trade, very little volatility. The first 3-minute candle confirmed the setup, and there it is, 40 points, 35 points, all right? Very easy trade. For most traders, this would be more than they make in a month, all right? 30 points, all right, with very little effort. And if you just traded down to the previous day's close, you did very well. If you traded down to the calculated trading zone through the whole 61-point range, you did spectacularly. So take a little hint, check out the Taylor trading zone together with the 6 trade setups: gap, support and resistance, trend, time and price, momentum, and candlestick. You'll be a better trader for it. You'll know when to trade, when not to trade. Thanks so much for watching Trade Safely. If you haven't seen my channel before, please subscribe. I'd appreciate it. Thanks so much for watching Trade Safely. Use lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.